Welcome to Explain the Charts, where we break down the news and chart data to help you make better trading decisions. Today, September 3rd, 2024, we're taking a deep dive into the GBPUSD currency pair. Let's start with the news impacting the market. Recent Google searches highlight a strengthening US dollar, driven by anticipation of a potential interest rate hike. The US dollar index, DXY, has gained strength against other major currencies, including the British pound. Several articles from FX Street and Daily FX suggest the pound sterling to US dollar pair is under bearish pressure due to the stronger US dollar. Additionally, concerns about China's economic health and lower commodity prices are contributing to the bearish sentiment. Furthermore, technical indicators suggest sellers are in control of the market, potentially pushing pound sterling to US dollar towards the 1.3040 level. This bearish sentiment is further supported by the U.S. manufacturing PMI data release, expected to be slightly better than July's report, which could provide additional support for the U.S. dollar. However, a significant decline in the PMI's employment component could indicate weakening labor market conditions, potentially hindering the U.S. dollar's strength. With all of these factors in play, we see a high likelihood of GBPUSD continuing its downward trend in the short term. Now, let's turn our attention to the chart data and see if it aligns with the news. We'll start with the one-day chart to get a broader perspective on the recent market activity. Looking at the one-day chart, we can see a clear downtrend in GBPUSD over the past few weeks. The price has been consistently declining from the 1.3124 level, breaking through support levels along the way. This downtrend is further confirmed by the downward sloping trend line, which connects the recent highs. Notice the lack of significant bullish candles, which suggests that the bears have been in control. However, it's important to note that the price has found some support around the 1.2850 level, indicating a potential area where the downtrend might slow or reverse. It's also interesting to observe the recent increase in volume, suggesting a higher level of market participation and potentially increased volatility. This increased volume could indicate a strong move in either direction. Now, let's move to the one-hour chart to delve into more detailed price action and potential short-term opportunities. On the one-hour chart, we see a more pronounced bearish trend. The price has been steadily declining from the 1.3000 level, forming a series of lower highs and lows. This bearish trend is further amplified by the recent downward spike in price, which broke through the previous support level around 1.2900. However, there are some signs of potential short-term bullish reversals. Notice the hammer candle, which is characterized by a long lower wick and a small body. Hammer candles often indicate that the sellers are losing momentum and buyers are stepping in. Another potential bullish signal is the doji candle, which has a small body and long wicks at both ends. Doji candles suggest a battle between buyers and sellers, potentially leading to a price reversal. These potential bullish signals should be closely monitored as they could present opportunities for short-term traders. Let's switch to the 15-minute chart to get an even closer look at the recent price action and identify potential entry points. The 15-minute chart provides a granular view of the recent price action. We can see a series of bullish and bearish candles, indicating a volatile market. While the price has been trending downward overall, there are several instances of short-term price reversals. Notice the multiple pin bar candles, which have a long wick in one direction and a small body in the opposite direction. Pin bars often indicate a rejection of the current trend and a potential for a reversal. We can also observe several engulfing candles, which have a body that completely engulfs the previous candle's body. Engulfing candles can be a strong signal of a trend reversal, especially when they appear at key support or resistance levels. However, it's crucial to remember that these short-term signals should be analyzed in conjunction with the broader market context and the overall trend. Now, let's summarize the key price levels to watch and discuss our unbiased predictions for GBPUSD. Based on our analysis, we can identify a few key price levels to monitor. The 1.3000 level represents a strong resistance level, which the price has struggled to break through. If GBPUSD manages to break through this resistance level, it could signal a shift in sentiment and a potential for a bullish move. On the other hand, the The 1.2850 level appears to be a significant support level where the price has found resistance in the past. A break below this support level could indicate a continuation of the downtrend and potentially lead to further losses. Our unbiased prediction is that GBPUSD will continue its downward trend in the short term. This bearish outlook is based on the strong US dollar, the souring risk mood, and the technical indicators that suggest selling dominance. However, if the U.S. economic data releases disappoint, particularly regarding employment, it could weaken the U.S. dollar and potentially trigger a bullish reversal in GBPUSD. We will be closely monitoring the 15-minute and 1-hour charts for potential bullish reversals, as well as the upcoming economic data releases, to assess the likelihood of a shift in sentiment. Remember that trading involves risks, and it's essential to conduct your own research and develop a sound trading plan. Don't forget to like, comment, and subscribe to explain the charts for more insightful analysis and trading strategies.